Hello there, and thank you for stopping by the channel. Welcome to WTF Mortgage, and thank you for checking out this video. This is going to be an interest rate update for 3 Feb 2025, and I am going to compare today's pricing with the pricing back in December so we can get an idea of which direction things are going in. Now, a few months ago, I made some interest rate predictions. I stated that I believe interest rate pricing was going to start dropping down after inauguration, shortly after inauguration. So we get to see if I kind of know what I'm talking about or if I am full of shit. All right, so before we get into that, I want to give you a quick way to determine interest savings without using anything special, like a mortgage calculator or an amortization schedule, because interest is so important, and so many people look over it. I call it the silent killer because it's draining your finances behind the scenes, and so many people overlook it. So let's look at a quick method to determine interest savings right now. All right, so here we go. We're using basic funky calculator here. All right, so a lot of people have interest rates. Tons of people have 30-year fixed rates right now between 6.75 and 7.5%. So let's cut that somewhere around the middle and say you have a 7% rate. All right, in this fictitious scenario, you have a 7% rate and you're out there shopping and rate pricing is dropping down, and now you see a 6.375 rate is getting right there with the amount of closing costs that you like, so you're about to go for it. So take your 7% rate, punch it in the calculator. I'm going to take it out a few decimal places. You don't have to do this, but I'm going to go 7.000 minus that 6.375% rate that you are thinking about making a move on, and hit equals. All right, the difference between those two rates is 5/8 or 0.625%. All right, so remember that 0.625%. Now let's say you have a loan amount of $550,000. Many of the loan amounts where I'm at are right around $600,000. So let's just call it $550,000. So you have a $550,000 loan amount. Put that in your calculator, or whatever loan amount you actually have. But let's go $550,000 in this scenario we're using. And I want you to multiply that by the 0.625 difference and hit the percent sign. All right, so we did 0.625% and now hit equals. $3,437 and about 50 cents or so. That is the amount of interest that you are initially saving per year. I say initially because doing this this field method of determining the interest, without a special calculator or anything, this is good probably for about the first 4 to 5 years. Then after that, the principal balance starts dropping down to a point where you have to use something else. But anyway, this is good for about the first 4 or 5 years. Pretty darn accurate. $3,437 in interest for the year. That's pretty doggone significant. Let's divide that by 12. Check out the monthly. $286 a month. There's a lot of people out there that are going to be at like 7%, and they're looking to get it down to 5.875 or 5.5 or 6%, before they think it's worth it. That's a bunch of BS. Look at these numbers right here. $286 a month in interest. That sure as hell is worth it. I mean, gas money, groceries, right there. And if you didn't do it, that's $286 going down the drain every month. So, all right, so I just wanted to give you that quick field method to determine interest savings when you're out there shopping. Let's go ahead and get into these interest rates. All right, folks, here we are with the interest rates. Here's today's pricing on top and December's pricing on the bottom. Let's kick it off with the 5.875% interest rate. We had an APR of 6.058 on this 5.875% rate in December. Fees of $13,605. Compared to today, the fees went up to $14,435, and you can see that reflected in the APR. The APR went up from 6.058 to 6.163. And if you've never seen these videos before, sorry for the folks who have seen it, but I've got to clue everybody in on this. The APR can tell you a few things. One of the things the APR can tell you when you are shopping, if there are fees associated with the rate being advertised. This is the rate being advertised here on the left, and the APR is on the right. When the APR and the advertised rate are the same, that indicates there are no fees associated with the rate. And when the APR is higher, that indicates there are fees associated with the rate. And the higher the APR is above this advertised rate, in other words, the bigger the spread between the rate and the APR, indicates more and more fees. All right, so let's get back into it. So that was the 5.875 rate. Let's take a look at this 6% rate. So 6%, same thing here. We had $10,450 in fees in December, $11,039 in fees. You can see it reflected in the APR, 6.121 going up to 6.221. All right, now I want to show you something interesting here. Now, while these lower interest rates went up, check this out now. So 6.375 had an APR of 6.482 back in December with fees of 5301. Now check this out. The fees dipped down a little bit to 5244, as you can see. And you can see now the fees dipped down just a tiny bit. So the APR dipped down just a tiny bit. Check this out. 6.482 down to 6.481, just down a little tick there. So you can see that APR rate relationship pretty clear right here. All right, so why don't we you can see these other two on your own. Why don't we jump up to these no cost rates here, the 6.875 and the 7%. So the rate and the APR are the same in December and February. You can see a 7% rate with a 7% APR in December, 6.875 rate with a 6.875 APR, and the same thing in February. So look at the change though. You can see the change here. The credits went up. So the credit for the 7% rate was 3030 back in December, and the credit for the 7% rate now went up to 4,365. So the rates stayed the same because they're still the no cost rates, but the credit went up that you get. You can see the same thing with the 6.875, went from 1,016 on up to 2,066. So pricing is we can't really say pricing is heading downward just yet, because we've got to take a look at the following weeks, but it certainly is a positive sign. So we'll see. So since we are in an environment with potentially dropping interest rate pricing, I'm going to kick these pricing videos out more often. I'm probably going to do one a week. I don't want to wait till like 2 weeks or 3 weeks, because too many changes might occur in between. So I want to give you kind of play-by-play updates. So I'll do another one of these pricing updates in a week, and then the week after that, and so on, so we can get a clear idea of which direction things are going in. So thank you for checking out this video. This concludes the interest rate update for February 3, 2025. Subscribe if you want to check this out, or bookmark it, whatever you need to do so you can check out the next interest rate update, and I will see you then.